our research group's webinar. Today, our speaker is Brian Peria. He is a manager with Kenfex since April 2010. Brian grew up on a mixed farming operation near Duke Lake, Saskatchewan, and continues to be involved with family farm. Before working at Kenfex, Brian worked as a livestock production economist with Alberta Agriculture and spent over 4 years working with MNP as a farm management consultant. Brian has had a privilege of traveling and working on farms and stations in Australia and New Zealand and visiting in North and West Africa. Welcome, Brian. Please continue with your webinar and thanks for joining us.
All right. Well, pleasure to be here and looking forward to some discussion tonight. Thanks for those who took some time to join me tonight here. I know the weather's been certainly a challenge today, so some of you might be watching this on a recording basis, but certainly hopefully there's stuff here that's not very time sensitive on the marketing school part or whatever we want to call it there. I'm going to start off today, though I will usually get always questions about marketing or the current markets, I guess. So I'm going to start with a little bit of a market update, maybe spend 15 or 20 minutes going over some of the high level things we're looking at today, what's hitting the markets or what I'm watching the most. And I think at that point, about 20 minutes in or when that's over, I'll take a little break and we can stop for some questions at that point. If you've got on anything on the market side, like I say, I'm kind of just doing a high level bit. And then I'm going to walk through a little bit of some of the tools and, other ways to look at markets. Talk about a lot of things that are in the marketplace that are going on day to day, but those are always changing. So how do you kind of find your own market information? How do you apply it to your operation? I think there's a lot of value in that. I can give you my opinion today, but that too can change rather quickly. And as we talk about different market factors, the market's is constantly trying to price all these things into the market. So hence that's why we're going to I kind of call it a marketing 101. It's an introduction to the market information that's out there that you can tap into every day. So I'm going to share my screen just a little bit on my PowerPoint presentation. Excuse me. All right. Hopefully everybody can hear me okay and see everything all right. I don't see I can't see comments, but I'll just carry on. I'll get into my presentation and we can take a little pause here. But so the biggest things we're looking at right now, obviously, as a lot of the information we track every day is often US based, and obviously the US market industry has a huge impact on what's going to kind of drive our marketplace here. We got to remember the US produces 10 times the beef we do. And for the most part, we have a fairly interchangeable grain-fed, well-marbled beef product. There's Canada, Australia, and the United States are three of the biggest that do that. So, we compete in the same markets for exports and import from similar countries. So it's going to drive our marketplace. One of the positive things I think we're seeing right now, or not right now, but hoping to see here later this year or soon. Or does Elgar, I see a hand up there. It's my presentation.
Oh, shucks. No, it's off.
Okay. You can hear it
around here.
Okay. All right. Well, it's good. I guess it's working then. So yeah, looking at the U.S. marketplace right now, the U.S. herd, went through a pretty massive, fairly large or rapid expansion from a percentage point of view, adding over 2 million beef cows from, 2014, 2015 through to about 2019. And over the last couple of years, we've probably lost about 500,000 beef cows out of the U.S. herd. If we look at all the demand factors, we'll talk a little bit about, but anytime we've got extremely strong demand, and if we're looking at tighter beef supplies moving forward, that's sort of the elements here that we've got kind of a bullish outlook for cattle and beef. The challenge we've had as of late, realistically, is beef demand's been great, but those dollars have not flowed back to producers, and that's what we're anticipating that will change as we get less cattle around, and we've got a little bit stronger competition from the packing sector. Obviously, they've got very good margins. There's no hiding that. That's just the beast we're facing with. They've got a lot of cattle to process through, and there's a bit of a bottleneck there. And until we work through all these cattle, they've kind of got the upper hand in the marketplace. So basically, we're looking from 2020, 2021, we're looking at smaller calf crops. This black line here is showing you beef production. We're still pumping out record beef production out of the United States, over 27 billion pounds. Partly, there's no more backlog from cattle left, but we did push some feeder cattle that got placed late in 2020 that are still coming to market right now, which is sort of weighing on our market right as we speak here. I think fed cattle prices could be a little higher, but again, we've got too many fed cattle relative to shackle space for the short term. But going forward, I think this is a positive news as we work through 2021 and hopefully moving forward. And if you're a cow-calf producer, hopefully we start to see, more dollars flowing down to you. On the trade front, Canada, we're still very, very export dependent. 45% plus of our beef or cattle is exported. Obviously, with the production issues last year, we did see some hiccups. We didn't quite maintain our export levels of the previous year, but again, not surprising how much exports were reduced in May and June. You can see here, we've had a very strong, on the left-hand chart here, very strong trend of growing exports. And we've seen incredible value of exports. And even last year, we were down a little, I think around 1% in our exports in volume, but value was actually up. So despite volumes being down last year, we set another new record high. We were over $3.2 billion of beef exports. And I think it's around 2015, 2016, we were only at $2.2 billion. So we've added $1 billion to our export markets in a matter of about five or so years. So extremely good growth there. And the beauty of exports I always talk about is, anytime you can sell more of a product and do it at higher prices, that's the best case scenario. Usually in commodity markets, if we have a big crop, prices go down. But, through all of these years, as export volumes have risen, values have actually gone up even faster. So that's been positive and continues to look very positive moving forward. China also definitely watching with their African swine fever. They've stepped into more beef out of North America as well. So that's helping. And, ASF continues to be an issue in China. It's not gone by any means. So we're continuing to watch them as the major importer of food, but red meat products by far. Imports did obviously last summer, retailers were simply scrambling to put meat on their shelves. So obviously we saw a bump in imports in the second quarter, and that flowed into the summer as well. So we did see the bump up, but overall we'd anticipate imports to realign closer to, somewhere between that 2019, 2018 kind of level. Australia is a major exporter, but they're looking at production possibly down last year, 15, 20% kind of numbers as they're trying to rebuild out of a drought as well. Extremely high cattle prices there, limited beef production because of the drought. So they're a main competitor of ours, and they're not going to have as much beef to sell. So I'm not sure. I don't know what you guys see. Okay. I'm just moving my my window or my window away. So hopefully you guys can see the entire charts here. Last year we saw incredible beef demand. So, we hear lots of different stories about concerns about beef consumption or beef production, I guess, whether it's animal welfare, environmental health issues, all sorts of things. But at the end of the day, in 2020 was a great test to the beef industry in terms of, how are people going to respond? They can't go out to the restaurants as much. We relied on food service tremendously. Are they going to want to pay the value on beef cuts at retail level? And they did, fully, beef remains the number one beef for, expenditures. Consumers are willing to spend money on beef production or consumption last year. We don't have final numbers, but probably about even with 2019. So we didn't really give up any consumption level. And we did that at, again, very, very, many months were record high retail beef prices. So while we were putting through and transferring all this beef around, and given economic uncertainty, beef demand was incredible last year, really. So That's another good news story. So both exports, international and domestic demand for beef remains extremely strong. So what's that mean in Canada? I guess quickly here, we've basically seen our herd continue to shrink. On January 1st, we were down another 1% in cattle numbers in Canada. Beef cows were down slightly, but on the other hand, breeding heifers were actually up. So cows were down about less than 0.5%, but heifers were up a few percentage higher. So we've actually got a few more breeding females in the herd to start this year, but basically flat. I guess best case scenario here, we might see some stabilization if the weather's going to cooperate this year. Seeing very good demand on the breeding stock prices. Bull sales have been strong, but even open heifers, bred cows, they're staying in the herd. So we'll call it stabilization, not really growth yet at this point. But that said, we're just over 3.5 million beef cows. We're pretty much at the smallest cow herd we've had in 30 years. You got to go back to about 1989 or 90. So, overall Canadian herd continues to be fairly tight on supplies. And I guess just on that, despite seeing our cow herd shrink, we've seen beef production expand significantly. We've added the new packing plant. It's not new, but a few years now with Harmony Beef, and feedlots have expanded. We're importing feeder cattle out of the United States. We've got a lot of pen space in Canada here too. So I think continue to see, if you're a cow calf producer, again, very strong demand for calves moving forward. So again, we've increased our fed cattle slaughter. I think in Western Canada was up over 25% in 5 years. So despite the cow herd shrinking, we've seen phenomenal growth in our feeding and packing sector here. Last year, obviously, this is a Canadian slaughter, weekly slaughter across the bottom. Obviously, you can see where we had our issues in April, May last year, dropping down to our national weekly slaughter was down about 24,000 head, I think. That's smallest in decades. But you can see the rapid recovery, the blue line coming up, by mid-June, we were above a year ago for fed cattle. Well, this is total cattle slaughter. So by the end of the year, we did work through the backlog. Challenge was our cow prices suffered somewhat. We exported some cows. But I think, again, quite a few maybe stayed in the herd for another year as well. But by the end of the year, our fed slaughter fully caught up, and we had slaughtered just as many fed cattle in Western Canada as we had the previous year. And as you can see at the start of this year, again, very strong slaughter processing levels. There continues to be concerns of COVID or, the odd case here and there at plants. They seem to be managing it well. Obviously, it's a risk we continue to need to monitor and be aware of. But for the most part, processing levels have been quite successful despite social distancing and everything else. Cow slaughter was down 20% last year, and it is again down 16% in the West. I think we're down 10% across Canada. So certainly seeing less cows going to market here, some more exported, but overall, as I mentioned, a few more cows maybe being kept. So what's kind of weighing on the market? One thing, we don't have it in here, but basis levels, Alberta, Western Canadian fed cattle prices and calves, well, basically everything, cows, open cows, cull cows, calves, and fed cattle. Western Canada is the strongest market in North America. Hence, I said we're importing feeder cattle because they're cheaper in the United States. We're exporting very few fed cattle. Just because, again, our prices are stronger. We were $7, $8, $10 per hundredweight higher. That's narrowed. We're only about $2.50, but that's not uncommon that we see our basis return more to closer to par. But we continue to have the strongest prices. Part of that's driven here is March 1st U.S. cattle on feed numbers, almost record high, basically record high, tied with the old record from 2006. As I said, we've had smaller calf crops. We lagged. There's 1 million head of cattle that didn't get placed in the second quarter last year in the United States. Some of them have been pushed back and are coming to market now. So the market's been a little bit disappointing, to be honest, at this time of year. But, we had 7 weeks where the U.S. fed cattle market traded at 114. And actually here, finally last week, we saw them kind of break out of that range up to 116 and sort of anticipating higher prices again this spring. Very seasonal, heading in, March, April tends to be our best price time of the year. So hopefully we continue to see these prices rally. On the right is Alberta and Saskatchewan cattle on feed numbers. You can see we're below a year ago. There's quite a few empty pens around. Feedlots had some substantial losses. Our feed grain was quite a bit higher for much of 2020. Barley going to China and having to rely on imported corn and such. So we've actually got cattle on feed down from a year ago. So hence sort of that imbalance, and our prices are at a premium. That said, we are below a year ago, about 8%. But again, we're like the second highest in a decade. So still large enough cattle on feed numbers as well. But again, hopefully we're working through these cattle, and there will be less behind them to put on feed. So what's happening on the pricing side? The left is the fed cattle market. You can see last year, obviously, with the slowdowns, not really representative, but here through the summer, fed cattle in the 130s. We sat there for many months, really. It wasn't until November, basically December, we finally saw fed cattle prices rally a bit and kind of rallied into February, but they've kind of plateaued and actually fallen off a little bit last week, kind of closer to 148, well below the 5-year average, which is closer to 160. So again, a little bit disappointing on that pricing side. Hopefully, again, as well, as I said, the US market's kind of starting to rally, that we can see some rallying as well. I think on the fed cattle here in Western Canada, supplies should tighten, as these yearling numbers sort of, we work through the bulk of the yearlings that are placed off grass. It's going to be another month till, calves start coming in too big of a way, So this is usually our opportunity for prices to rally, and hopefully we see some of that. Unfortunately, feedlots still not making money. A lot of these feedlots need 160 or more to break even. So, a lot of fed cattle still being sold at $150, $200 losses. So we're going to need some up and rally in the market. Calf prices, though, despite that, here's the 5-year average. Calf prices, feeder prices as well, similar story. They're basically right in line with the 5-year average, which is really surprising. We talk about grain prices as high as they are, the dollar's risen, feedlots have lost money, but they continue to pay up. Grass cattle, obviously, with the high cost of gain, if you can put weight on grass, that's worth a lot more on a year like this, or it's worth more in a year like this. And the other big thing, and what I'm kind of going to talk about in the next part of my presentation, is the futures markets have been very strong. They're rallying. The futures are projecting higher prices. They're pricing in some of this optimism I've talked about, and the red meat markets from a supply-demand dynamics. We're expecting higher prices, and as feedlots buy cattle to place, what they're hoping when the market turns, or when they go to sell them, they can sell them for more. Just a show, here's the Canadian dollar. Obviously, a year ago, we were about 68, 69 cents, and we pretty much rallied straight since then. And, we've hit up to 80 cents here a couple times. And, realistically, the uptrend continues. We haven't seen the dollar break trend. A lot of this has to do with the US dollar, politics, other things. Oil prices have rallied, some other commodities have rallied, which is good for our dollar, and weakness in the US dollar is propping up our dollar. We'll have to see if we can if we break out of this 80-cent trend, it's, that does take a bite out of calf and feeder prices. If it kind of bounces, 80 cents is the floor or ceiling. If we bounce back down, well, that would bode well for our prices. And feed grains, just incredibly strong. There's going to be a lot of barley seeded this year, obviously. Lethbridge barley was touching $7 a bushel, still just under $7 today. New crop barley around $6. Hopefully we get a big crop and a lot of barley gets contracted, but not all of it gets contracted. So hopefully there's more on the cash market, and we can see some price relief for the cow-calf guy anyways in the feedlots. But for right now, it certainly remains a challenging market for cattle feeders. I talked, just to switch it up a little bit, but what's important, I mentioned, I haven't talked too much about hogs, but obviously the red meat markets move together. China's a big pull or demand for pork. And a big reason I put this is, we've seen US hog numbers are going to be lower this year. So it's been almost a decade since we've seen year-over-year declines, or of any significant declines, 1% to 3% less hogs. Extremely strong demand. Hog prices are right now at the highest level since 2014 or 2014, I think, which was when they were on their run to record high prices. So this is kind of what it has turned the corner for them, as their numbers have tightened. That strong demand for pork is getting passed back to producers. We haven't seen that in the beef industry, but I guess somewhat anticipating that to come for cattle, hopefully, barring anything happening between now and these numbers tightening. But, strong hog prices is supportive to the cattle sector and beef sector too. I will, I guess, I'm not sure. I think few of you guys are Canfax members, but always, if you're looking for market information, you can go to our Canfax website. And, for cow-calf producers, if you want ongoing market info or reports or to talk to myself or other analysts in the office, you can become a member, but it's $175 a year for the Canfax membership. And I'll pause there. I guess if anybody's got questions, I can pause on markets. There's, that's kind of a brief overview of some of the key things I'm trying to watch, but I'll pause for questions. And if not, we can do them later or I'll continue, but I'll give you a second.
Hello, audience. If you have any question, please type in the chat room there. If not, you can raise your hand and I'll allow you to talk.
If not, I'll just continue on then.
Go ahead, please.
Yeah. Okay. So yeah, some of the other parts of this, I guess, is as I talk about all these different things, trade, exports, lower numbers, higher pork prices, all sorts of stuff. A lot of that is priced in, or well, it's all priced in, or people are trying to price it into the market each day. As I mentioned, hog prices are higher, cattle futures are stronger. So they're already anticipating these higher prices. And to be honest, right now, calf prices and feeder prices, we look at where the dollar and feed grains are, and the feedlots continue to lose money. Why are they paying so much for feeders? Obviously the supply and demand fundamentals are working for cow-calf guys and feeder guys because they're still gambling on these ones they're buying. If they go to buy your feeder and got to buy this grain and, try and risk manage, they're basically penciling in a loss. So they're anticipating the market even rallying further above the futures market. I guess one thing I didn't mention, but the December futures, for example, what do we think fed cattle are going to be in December? They're above the 5 and 10-year average. They're above the levels. They're at some of the highest levels they've been in since 2015. So those are the kind of things that are propping up feeder prices despite high grain prices in the dollar. That's what I want to talk a little bit about moving forward. But starting off with a little bit of basic marketing stuff. And I think it's an opportunity for everybody, whether you're grain producers, cattle producers, to think about marketing calves. I think price insurance is a great tool that's out there. You might be out here calving, or you might not even be calving yet, but we can start thinking about marketing your calves. What if the dollar, drops significantly in the next month, or futures rally, or both? Price insurance is going to go up. It's going to give you an opportunity to lock in higher prices, or lock in a floor price on the market for your calves this fall. They might not even be on the ground yet. So, we see a lot of grain guys, as I mentioned, barley. There's a lot of guys selling barley for September, October, November delivery. They haven't even put seed in the ground, but they've already sold the grain. Similar opportunities exist for cattle producers if the market is, offering an opportunity to make some money. Price insurance is one of those tools, and so is the futures market. So what I like to talk about is marketing is not an event; it's a process. Often guys just, they produce their calves and they sell them on such and such a date, or take them to the auction mart, and they get what you get. And unfortunately, there's that's consistency is one method, but sometimes you miss some opportunities. Could be in July, could be any time that you could actually, you can influence the price of your calves more so long before you actually sell them at the auction or deliver them somehow. So you want to take some of the emotion out of the day-to-day swings too. We're all optimists. We're sitting on cattle because we think they're going to go up in value. But what is the market telling us? What's the math actually going to tell us? And that's what we want to get into take the bias out. We can add in our biases after what we think the market's going to do, but what is the market actually telling us is what I like to focus on too. But again, before we do any real production or marketing side, if you want to build a real marketing plan, or we talk about price insurance, or you get offered a price for fall delivered calves, what is a good price? One way, a key starting point is knowing your costs. And I'm sure you guys all know this. This is a very simple and quick example, but we can't really start building a marketing plan or do risk management until you know what is a break even. You might be locking in losses type thing. Otherwise, versus looking for other opportunities if you're not locking in a high enough price. So quick example and why it's important. We sell pounds. Basically, we're weaning pounds of your cow-calf producer. You're weaning pounds of your calves. That's what you're selling. You got X many pounds to sell each year, give or take. A lot of costs are broken down per cow. That's a starting point, but it's not always the best. It's not the greatest measure, actually. So you take producer A here, you've got an annual cost of $900 a cow, and you got producer B has an annual cost of $1,000 a cow. Who is a lower cost producer? So obviously 900 or 1,000 looks pretty simple. But quick breakdown of how their operations or how their production performance actually compares. So, cost of production includes both costs and productivity. So the first guy who's got $900 a cow cost of production, he has weaning weight. So for all the cows he's feeding and wintering, 92% of his cows wean a calf, and his weaning weight is averaging not 525 pounds. So his cost of production is $1.86 a pound. So again, you got to remember this is across steers and heifers. We're not last fall. There's times we're not much above that if you're averaging out steers and heifers. But nonetheless, this guy's weaning 525 pound calves. His cost of production is $1.86. The guy who's got $1,000 per cow per year per cow costs, he's got a 96% weaning rate. His weaning weights are averaging 585 pounds. So his cost of production is actually $1.78. So again, his cost of production per pound is lower than the 525. Now, again, it always goes back to the marketing. Some years a 525 weight may sell for have more than an 8-cent premium to the 585s. You're putting that calf on the market at 585 pounds in early September and November, all sorts of different things. There's a huge price difference of a 6-weight steer, let's say, in September versus a 6-weight steer in November. So these are the kind of things, but you need this costing element to then start thinking about your costs and your marketing plan or strategies from there. Just keeping that in mind. As I mentioned, price insurance is out there. It hasn't been spectacular, but if you look at what the market's, as I said, what's the market telling us? It's just math at this point. Everybody else is sort of guessing on playing the futures side of things as to what they think feeder cattle are going to be worth this fall, and given the dollar and given feed costs, what do we think they're going to be worth this fall? So based on a 550 to 650 pound steer, it's going to cost you, the coverage is up between 206 to 210, 100 weight last week. So it's going to cost you about $40 a calf to lock in those kinds of levels, depending if you're selling in September, October, November kind of thing. So again, that's going to be different this week. The dollar's down. Futures had a good day today. Hopefully coverage is up tomorrow. But is that good value or not? It's a starting point. Last year, price insurance is to prepare for a disaster. It's another key point. Last year, people could have had locked in, I think it was around 218, 220. They didn't, or not many did. And then the markets crashed. And then everybody's saying, well, price insurance isn't working. Well, it did work. You chose not to buy, and, market situation changed dramatically, and the coverage dropped. So price insurance is there to prepare for disaster. It's not there to bail you out after disaster happens. So you got to be proactive with this stuff. Feeder cattle, if you got grass cattle, that insurance has come up quite nicely. Maybe we'll see a couple more bucks this week, maybe more. Maybe we'll see $2 offered if the futures have another good day tomorrow. So these are for 850 pound steers coming off grass, depending on the window again, but 192 to 198 last week for price insurance. So that's not a bad level for some of these cattle. At least it's a starting point to buy some if you wish. So you can keep an eye on that. It'll change Tuesday, Wednesday, Thursday. So you can buy in increments. That's the beauty of this. You don't have to buy it all at once. I get that often, cow-calves, like, when should I buy my price insurance? They want to buy it all at once, and definitely don't recommend doing that, because the odds at any point in time, there's a pretty good probability the market's going to improve from any certain day. And the probability of you picking the top is almost zero. So why not buy some and buy more if it goes up? And maybe you did buy near the top, and if it's only going down, well, you've at least got some coverage at that higher price level versus watching it go down. It's extended out now. It is available till June 10th. And you'll also be able to insure calves, I think, into January and into February as well. So 5 or these 600-pound steers. So there's going to be some, or there is some add-ons coming for the price insurance. So that certainly fills a bit of a void as well for guys, which is good. If you're selling calves that go, for the grass market early in the year, watch for those changes. And disaster insurance, again, other things I look at, as I said, you can buy it incrementally. You can buy for 1 calf, 10 calves, 100 calves, however, 1,000 calves, whatever you got, and whenever you want, kind of thing, on those Tuesday, Wednesday, Thursday. But, as the market's rallying, it's sort of like canola, any other grains, as the market rallies, sell some, and then who knows, you could get a big correction, and at least you've got some protection there. And if it goes up and you never use price insurance, well, that means you just got more money then you should hopefully be into some profit levels at that point. I talked about it being a disaster, preparing for disaster. Other thing I do question, guys, a lot of guys, they'll say, well, I just want to insure my break even, or, or they want $2 calves, or they don't want to spend so much on premium cost. And I guess if you're extremely tight on cash, I guess you could argue then, yeah, maybe you don't want to buy higher coverage. But let's say if your cost of production is $2 on steers, heifers, you want $2, but they're offering, $2.20. Last year they're offering $2.20, and if your break even's $2, if you buy the $2 a calf, so your best case scenario or worst case scenario, if there's a disaster, you're going to break even. If they can buy $2.20 insurance, you can lock in a profit. You might have to spend an extra $20 a calf, but then you're also maybe gaining $120 if something happens. So I sometimes challenge guys a little bit. You want to save money, but on the other hand, it's kind of nice knowing you're actually going to make money, even if something does happen from a market perspective. The other thought is maybe you don't buy as much coverage, but you buy more good coverage. And that was, again, last year you could buy that $2.20 coverage. Guys who bought that paid up for it, they got payouts. The guys who bought the $2 coverage didn't get payouts, so they lost all their premium. And $2.20 guys, they spent more and it got it back. In the last couple of years, that's actually been the case. Buying the better insurance, spending the money, you actually get your premiums back. But again, if we're in a rallying year, you just never know. But something to consider. There's no perfect answer there either. And again, it's a market floor. You're insuring the market. You don't have to sell your calves. If the market drops below your coverage, you get a payout, whether you sell your calves or not. So that's, costing, price insurance. I'll touch a little bit on price and market seasonality. I mentioned, I'll see if I can get into it in a little bit on my spreadsheet, showing about why are 6-weight steers in September worth a lot, or often you'll go to market in September, a 6-weight steer will be worth just as much as a 500-weight steer. 650-weight steer is worth as much as a 550-weight steer. Why is that? People often ask. Versus once you get the bigger steers in November, they're not worth as much, but it's all about their marketing window. This is showing you fed cattle prices through the year. So January, February, generally between, as I talk about March, April, this window we're in right now is usually the highest price calves. And it, usually May, June is a decent market. So a 650 weight steer in September, if you can get them finished into May or June, he can be worth as much, because you're going to sell him for more money as a fat steer versus a 550 weight steer that you're going to be selling in June, July, August, if he's going to feedlot. So you can actually afford to pay as much per pound for a 650 weight steer in September versus a 550 weight, just because you're going to get them finished earlier. Again, lots of assumptions, but that's the general why guys value weight early in the fall. So it's all about, it drives off when are they going to get finished. As you get later into November, December, those 550 weights pick up, because again, they may hit grass and then they're going to get sold as fed cattle either in December, let's say, or again in January, which tends to be stronger markets. So you just got to think backwards realistically. The feedlot or buyers are like, when are these animals going to get marketed? What are they going to be worth when I sell them? So you want to graze calves or feeder cattle that are going to hopefully hit a market that's at a better price level as a finished animal. Or if you're selling into these markets, you better be low cost, basically, is what you're looking at. So these are kind of the things. And again, in the spring, I've got feeder cattle, March, April. Why are feeder cattle 8 weights? In the fall, they want weight. In the spring, they don't want weight. They want light stuff to go to grass. Because all of those calves in the fall that are going to get finished in August and September, or they get backgrounded and sold as 850 weights in March, April, those cattle all hit the low market. So you've got a March, April 850 weight steer that's going to finish in August, September. That's the low. So I'll flip back to the fat cattle market. That's why they're discounted right now, or tend to be at this time of the year. So you're selling into a poor fed cattle market. And again, they rally into the spring into the fall, coming off August, September, October, because those yearlings that are coming off grass are going to get finished. These guys will be, again, Jan, February, March, April. That's kind of your best market of the year. So they're going to pay up for a lot more for an 850 weight steer in October than they are in March, April. It's just based, again, on feedlot seasonality or fed market seasonality. And again, you can go back to 550 pound calves. As I said, early in the fall, those calves aren't worth a lot, relatively speaking. Because again, they're going to get sold in a poor finished market, or they get backgrounded and sold as March as 850s, which again is a depressed market. Again, in spring, anything that can go to grass has higher value. So that's the market seasonality. We can talk about futures. The reason I go into this, I think it's worthwhile, is there's a huge amount of market information or intelligence you can use. We can look at the futures and all other things that are constantly moving, but sometimes, 7, 8 times out of 10, market seasonality is right. We know that September, October is going to be the low for calves. Fed cattle, March, April, and December are the high prices for fed cattle. So whatever the price is in August, or if we know in April, let's say the high, April, May, we hit a high, we know we're going to drop 15 or 20% into the summer. Again, 70% of the time. But that's a pretty good odds versus, speculating on other market factors that are out there. So that's why I like to spend some time on seasonality. It's a simple one, but it does provide a lot of market insight. So marketing 101, I guess, to the next level, or well, not level, but just to talk, I want to just show a little bit, where do we find this information? So I've gone through the seasonality and price insurance. All this stuff's based off the futures markets. Not sure how many of you guys follow the futures markets, but they are the biggest indicator and the biggest tool we have to get market insight. When something happens, like COVID, and plants slow down, the markets tell us really fast what's going to happen, and they're going to go down. And sometimes they overreact. Absolutely, last year they went much lower than than the cash did, but there was other things that happened in the cash market last year. But there's also times they rally higher than they should. August futures right now, we've got a bit of an anomaly as I talk about seasonality. August futures, so it's basically August fed cattle, are actually higher than the current cash market. It's telling us, the futures are saying or guessing that summer fed cattle prices are going to be higher than they are right now. That's a bit, not very common. It's not, I'm not even sure I'd say likely, but it's not very common situation. So you got kind of two different contradicting things going on there. They are optimistic, but if you're managing risk, you got fat cattle to sell into the summer. Futures are giving you some opportunity to maybe hedge and things like that if you're comfortable to do that. But what I want to talk about is just, here's the real primary preliminary thing about futures markets that you got to understand before we even start talking about risk management and hedging. Just to show, this is the long-term, or this is the futures over the last, over 10, 12 years now. We saw the rally, 2010 basically rallied straight through from 2014 and then crashed down after that through to 2016. That fall was pretty ugly, but we've generally trended sideways since for the last almost 4 years. There was some noise. COVID actually, we, obviously drove things down further than was expected or would have been under normal market conditions, but nonetheless, they have rallied back. So look at this futures chart. Here's cash prices back to 2010. Pretty similar story. So again, futures are based in Chicago off the CME. They represent US. They can represent US cattle future, or fed cattle prices, or feeder cattle prices. Like it or not, anybody can trade futures. They can be a hedge fund. They can be anybody who wants to bet on prices going up or down. You can sell the futures or buy the futures, whatever you think of whichever your opinion on the marketplace is going. But the key at the end of the day is, like it or not, all these people that are putting money into the futures are a big part of price discovery and can give you some insights into the market. But they do follow what happens in Chicago has a big impact on us here. And that's probably the biggest point, or one of the biggest points we want to start off if kind of this futures stuff is new to you. And again, futures, they're a tool that are out there that you at least start following it. You're not going to, if you're just new to following futures, you're not going to go put some hedges on or opening a trading account after this presentation, but take some time to start to understand them though. But most of the pricing alternatives are going to be based off of the futures. Price insurance very much uses the futures. If you're trying to sell calves to a feedlot today, the feedlot's going to say, well, what do I think when I finish your calves or these feeders, what are they going to be worth when I go to sell it? Well, they may go talk to the packing plant and see, well, what's a contract you can get? Again, the packing plant's going to give them a price based off the futures and the dollar and basis levels, etc. Or the cattle feeder can figure it out himself. But again, if you understand what your customer is calculating, you can decide if he bids you $220 on your calves for fall delivery, is that good or bad price? Could be good relative to your cost of production, but you could also say, well, no, I could, they're at $220, he's locking in $100 profit. We saw that in 2014 as prices rallied, people sold their calves, they were happy and got good money, but they also left money on the table too. So, or if the price is not to what you wanted, but if you actually do the math and the feedlot's actually already projecting $150 loss, which they do sometimes or have been doing, you might say, well, it's not quite the price I want, but at that price, I'd rather take it and pass all of the risk on to your buyer. And then once you understand these futures, you can talk more about risk management. So quickly, I'll just talk a little bit about live cattle futures. We'll look at online. Again, live cattle futures, there's two. There's live cattle and feeder cattle. Basically, simple thing is live cattle futures represent what the U.S. Or what the market is anticipating U.S. fed cattle prices to be down the road. Could be for April of this year, June, August. You can look all the way out into April 2022. If you've got grass cattle right now, those futures are all much higher than today. So that's positive. They're projecting higher prices going forward. So why are, calf prices are definitely being supported by these high futures. What if they change or the trend changes? What's that mean to your calf prices? And that's kind of what I want to show you. But if you really want to get into it, you can go to just Google CME Rule Book, Chapter 101, Live Cattle Futures, and you can read about all the details. But they do represent true fed cattle. And in April, as we can deliver cattle against the futures. So they do have to come back to match the actual marketplace. So paper can't just run wild and free. It kind of does sometimes, but at the end of the day, when the contract gets to expiry with the end of April, the April futures will expire, and then we look at June. April will have to represent or be close to the cattle market. Dollar, we'll also look at the Canadian dollar futures. It's just showing you, again, $100,000 contracts. What's the Canadian dollar at? And you can buy and sell Canadian dollar futures markets. Just understand it's $100,000 worth of dollars that you're basically trading in the U.S. market. So we'll look at the dollar futures. And basically, if you take the futures and then you adjust for the dollar, so what do we think? How do we take this futures market information and bring back to Canadian, or basically back to your operation or your ranch or your feedlot? We take the futures and convert it to Canadian dollars. That one's straightforward math. The next part is a bit of the uncertainty and unknown is what is the basis. And traditionally, the U.S. produces 10 times the beef we do. Traditionally, our market price used to average, you take the U.S. price and then you would subtract transportation and transportation and border crossing costs basically. And that would be our price. So it costs you about, let's call it $8, $9 a hundredweight to get cattle to Nebraska. Let's just say that when we used to do it that way, to get the cattle across the border, vet checked and transport, our prices used to average about $9 below the US. That was our basis. It fluctuates though. It's not always $9. Sometimes it's zero, sometimes it's -15. August, September are tough basis months. It's important to know that too. And yeah, we have a feeder cattle basis and the fed cattle basis are different numbers as well. We have all that data at Canfax, and we can talk more if anybody wants after. But yeah, so we've got to adjust the US price. And as I said, right now, we're actually positive. So sometimes the packers will say, we'll offer you a price above the futures. And that puts more dollars in the feedlot pocket, who then basically will bid more on your calves if he can do that, or get that positive basis. But we need to adjust for basis. And I'll show how that works here shortly. And as you can see, as I said, this is the basis each month. It's different, but you can kind of see in the summertime, we usually have a fairly strong basis, whether it was 2020, 2019, 5-year average, we're usually at a positive basis level. But it doesn't always work. Usually February is a tough basis time. We were, as I show, well, I didn't show, but we've been positive all year. So, but what's that done? That's put extra money into the feedlot's pocket. It's not enough to make him money, but it could have been worse, I guess. In other words, we've been at a premium to the US. So we need to adjust for that. Feeder cattle futures. So live cattle represents fat cattle. Feeder cattle futures represent it's kind of stalker feeder, no, not stalkers, but feeder cattle, basically 850 pound steers. And so we bounce around par to -5, -8 against the US market. But again, right now, our feeder prices are much higher than the US market. The other one I will point out just quickly before I switch off is, so Canfax, we do have a mobile site. We used to have an app. So it's not in the app store anymore. It's on the mobile site. But if you go to our website where canfax.ca, and then on the right-hand side, you can go to the mobile app. And on there, you can look at the futures charts. You can look at price insurance levels, and then there's calculators and projections. So you could go in there and, well, this is from last fall, unfortunately. But you could go there today and what do we think? I want to sell 600 pound steers in September. What do I think that price is going to be? And it'll spit that out for you. It's going to be a guide, but it's hooked into the futures. So every day, or even you go back an hour later, it's going to change if the dollar's up or the futures are up, or some sort of change. It's going to automatically change and show you what those calf prices, what these market moves mean to your calf prices. So I just recommend checking that out. FCC or Ag Expert sponsored a good chunk of that for us, and it's free to everybody, whether you're a member or not. Okay, so I'm just going to switch gears here a little bit on, I think I got to stop sharing my screen. Just going to share a different screen. I'm just going to quickly go online, and if I just want to show, I'll just show you CME live. How you want to find this, you can look on the app, but there's where the actual source data is coming from. So we just go to live cattle quotes, futures quotes. So you can go online and you can go look at all the different futures. So as I was talking, April futures, so that's nearby. When we talk, that's the next contract to expire. We were talking 121. So this is US fed cattle prices. April is projecting them to be 121. Last week they were 116. So obviously they're expecting by the end of April prices to rise. But as you can see, you can look at June and August, October. Obviously the fat cattle prices move throughout the year. But the odd thing, as I showed in, August tends to be a weak market. It's slightly above April. This is an anomaly. But October, December, February, April, futures keep getting higher. They continue to project higher prices. This is saying April next year, we're looking at 130 fats. Again, it's going to change between now and then, or it may not. But, it's the main thing I look at. We're projecting higher prices from the futures. So if you're selling feeders that are going to get sold in April as fats, the higher the futures go, the more money you're going to get, assuming the dollar doesn't change. And we'll talk about that too here just quickly. But you can pop up a chart and just so you can see the trend. And again, you can see that's some solid growth through last fall, and the trend continues to go higher. So the trend is our friend and working for us here. So it's a good idea to just watch these things. 129 may not mean anything to you, but after a while, if it's 140 or if it's 120, it's a starting point. But how do we use that price? How do we use this information? Ultimately here, this is what I just want to quickly show an example to apply this information. Stop sharing again. I'm going to do a quick share screen, and I've got a little spreadsheet to share. Some of you might have seen this, but so we want to see what are our calves going to be worth. I'm going to say, so basically, as I said, in any kind of situation, usually if guy's doing his diligence, who's going to buy calves, he's going to figure out, what am I going to sell it for when it's done? And in this case, I'm going to use a finishing example. What do I think it's going to be worth when it's finished? And then I work it back as to what's going to cost me to finish the calf, and then how much can I ultimately pay for a calf. So let's presume, and more so, this is kind of for the fall run. So we want to say futures are projecting in. So we're really got to look further out into 2022. If we want to look at futures at 120, we'll use a 122. So I said April's 129, but your calves aren't going to be finished in April. They're going to be finished in June or August or September. So we'll use a 122. We'll assume the Canadian dollar stays about where it is. It's 79.5 cents. And as we get into that basis, I'm going to use a -2 basis level, and we can adjust all these things obviously. But so what do we think what are we projecting? Let's say this is for next August. What do we think fat cattle prices are going to be? So this is, what are they going to be when this year's calf crop goes to get sold? So we just take the futures, we divide by the Canadian dollar, convert to Canadian dollars. Then we got to, subtract the basis or add that negative basis on there. So we're expecting a Fed price of 151.5, which that's, close to where we were a couple of weeks ago. So we're going to say, well, we're going to sell a 550-pound steer, where the feedlot's going to feed them out to 1,450 pounds. Now, barley's extremely high. We're going to use a cost to gain of $1.25. So if grain prices come down or barley's closer to $6, so let's use a $1.20 cost to gain. What's it going to cost the feedlot to finish this steer? He's buying them at $5.50, and this is assuming he's going into a dry lot for finishing. The feedlot is going to have to pay. It's going to cost him, he's going to grow them from 1,450 pounds, or from 550 to 1,450. So he's got to add the difference. So he's got to add 900 pounds, and for each pound he puts on, it's going to cost him $1.20. So to finish this calf, he's got $1,080 he's got to spend to finish this calf. That's what his feeding costs are going to be. And that should be everything: feed, vet, yardage, the whole works, include some death loss, interest, everything. So when he goes to sell this steer, when he's finished, how much is he going to get for him? Well, he's going to get his weight, the 1,450 pounds he's selling him for, times this $51.46. So I just got to divide that by 100 to get it per pound, or that price per pound to get total dollars per head. So he can now finish, when that steer's finished, he's going to get almost $2,200 for the calf when he's finished. So how much can he spend on his calves, on your calves? $2,196 minus, so if he can sell them for $2,200, it's going to cost him $1,080. How much can he spend on your calf? $1,116 is how much he has to spend on his calf. And so how much is that per pound? So basically he's got this many dollars to spend, $1,116 to spend on your calf, and your calf's going to weigh 550 pounds. This is assuming, again, there's no emotion really here. This is just math. This is projecting, and again, it assumes the futures are 122 and all these other things. He can pay 203. So that's a real basic starting point for calf prices this fall. And again, as we said earlier, there's a lot of optimism out there. That's not very exciting. But we got two kind of things eating away at our calf prices is the cost of gain and the Canadian dollar. As positive as things are, there's a lot of there's a very low probability looking back that if you have much higher grain prices and a higher dollar, you usually don't get higher calf prices. So as optimistic as we are, there's still, some caution there. Obviously 2020, it's, we were in a depressed market state. So hopefully we can get a boost on the markets, but we're going to need some things to continue to go, the futures continue to rally or that kind of thing. Key point I like to point out is just how big of an impact different variables have. As I talked about, what if the dollar starts sinking in June? What's that going to do to calf prices? Let's say the futures stay. If the dollar goes to 75 cents, look what this price, how much the dollar impacts. It goes from 79.5 and it drops to 79 cents, or goes from 79.5 to 75. Now, with changing nothing else, calf prices have now projected up to 227. That's a huge change without really doing much. But a feedlot or your calves may, if you're trying to private sell calves, you may just, there's another quarter, 25 cents a pound almost on the table just with a drop in the dollar. The basis has been positive and strong. Even when we change the basis to 0, it's 232. One thing I like to point out, so for every time the dollar, so we're at 232, keep that in mind. What if the dollar goes up 1 penny, goes up 76 cents, goes up a penny, calf prices go down about 5, so 227. So that's where, every time the dollar moves a penny, it doesn't happen instantly, but if between now and fall, the dollar starts changing, you could anticipate higher or lower prices. Not to get really ugly, but uncertainty, if we had an 85-cent dollar in this exact situation, those calf prices drop rapidly. Not to scare anybody, not think that's true, but there's another example of price insurance at 210. It is an opportunity to, it takes this risk away from you. Dollar going away, feed costs continue to go up, et cetera, et cetera. But if we took the whole marketing place and if, was to put kind of a more typical, well, not typical, but a more positive, 75 might be a bit much, but a 77-cent dollar and feed costs closer to $1.05 or something like that, we can get these calf prices in a decent realm. And I guess before I'll ask for questions right away, but that's kind of my perspective for this fall, barring, dollar could run, there's could be all sorts of things happen. But I've often said, or where I'm kind of feeling my bias is calf prices should be close to a year ago, with upside potential. Not to say we can't go lower, but my kind of bias is with the way the market's shaping up and without any supply chain issues. That's kind of my bias is, hopefully we have calf prices at least equal to a year ago. And again, things start to run, dollar drops, futures go up, other things go our way. We could see calf prices higher, but again, certainly no guarantees there. So I just covered a ton of stuff. I hope I didn't go too fast. I will pause for questions. I guess did anybody type anything or send anything in for any questions? Quiet group. What I will do if there's not questions, I will just show, things I liked were, as I alluded to, why is a 650-pound steer in September worth as much as a 550-pound steer? So, let's put this back more. We'll put this kind of back where it was, but let's leave it. Well, let's put the dollar back. we'll use a 79-cent dollar. So 550 pound steer, let's say in September, it's going to finish in August. It's going to be worth 211 a pound. So keep 211 in mind. Excuse me. I'm going to do a few things here. Let's say a 650 pound steer. Well, let me make all the changes. And let's say he's going to finish out at 1,500 pounds. But let's just remember, when's he going to finish? The cattle futures are at a 550. The futures are going to be 122. But if he can finish into June in a better contract month, and let's say the futures are 125, because he's going to he's going to sell into a stronger market on a very, very basic principle. He's going to finish out a little heavier. And there you go. The 650 pound steer, all I did was change the futures because he's going to finish into a better market. He might finish out a little bit bigger if he's a growthier calf. And again, remember what I said, the 550 pound steer was worth 211. And in this case, he's worth 208. A 650 is worth 208. So you hardly see any slide. And that's why you see that, that's why you kind of see those kinds of price relationships at different times of the year. It's all about when they're going to finish and when those fed cattle finish. So that's just kind of a little bit of playing around I like to do. If we go back to the 550 and a 122, and it also shows how big of an impact. If you can finish your steers, wide growth, and steers are worth more. We've seen more maybe demand in those growthy or exotic cattle that finish bigger. They can go to 1450 and still have the same cost of gain. They're worth 214 versus another one. If he's only going to finish out or burn out at 1450, he's only worth 211. So why do we see bigger exotic steers high demand? Well, very much related to the fact that again they weight is a lot. We're paid in pounds. So you can see right there. What I want to just show real quick is the big question is heifers. Why are heifers so much behind steers? So why is a 550 weight heifer, let's say 27 cents? So we're back to this 211 again. Let's say you got 550 pound steers, they're worth 211. A 550 pound heifer in the fall, if she's going straight on to feed, what if she's only going to finish out at 1,300 pounds? The two biggest thing is outweight and cost of gain. So if that same heifer, if the steers, realistically, if a steer is going to finish out at 13 or 1450, a herd made heifer that's going straight on the feed is probably going to be done at 1250. A lot of these cattle are bigger, but we'll use 200 pounds back. So right there alone, the heifer, because she only finishes at 1250, is worth $1.98. And the huge thing here, cost of gain, we're looking on those types of heifers again at minimum 10% more. They don't convert as well, maybe a little more death loss or such, or health. You got to add at least 10%. So on $1.20, so it's going to cost that same heifer $1.32. What's that do? So $1.83. So why? And again, this is just math. And, there's a lot of guys that feed a lot of steers. And if heifers were really a steal of a deal, why aren't feedlots buying them at these big spreads? And it's honestly because if you look at conversions and outweights, they just don't pay as much. So I had the old steers at 211. So if you want to do the math, the discount on a heifer should be, just from the market info, is 28 cents. And we've often been around 26, 27, 28, 30. Sometimes it does get wider when barley shot up and things like that. So if you don't like the discount between heifers and steers, I think the market usually does a pretty good job of figuring out why heifers should be discounted so much. So just some examples of that. There's a question here on the chat. I'm not sure. I'm not quite sure if I know the feedlots. There is some stress going through the auction market. Sorry, Dale. Do you want to just maybe ask the question? need to move calves to feedlots without the stress and shrink. I think there's many, I think we're seeing a lot of producers look at direct marketing for that sort of reason, trying to reduce risk and shrink and different things and help overall animal performance going straight from the ranch to a feedlot. And sometimes we do see sometimes we see those prices stronger. You reduce those transaction costs and you can relay some more information about your calves sometimes to auction if you're dealing directly with feedlots, especially when you put load lots together. That's a key part. If you only have half a load, sometimes the transportation costs eats up any kind of premium you may get for calves. But if you want to expand on that question, Dale, I'm happy to discuss.
Excuse me, Dale, you are allowed to talk.
You're on mute if you're trying to talk too.
Yeah, I was just trying to wonder what was available for moving cattle right from the farm to the feedlots.
Yeah, what kind of options are? Well, definitely, we're seeing a lot more guys go on electronic auctions, like Team or DLMS. They're listed on auction. They come and video your calves. You can describe them. They can take, more information about all sorts of factors than your management side. And then they can go up for bid. And, at that point, rather than hauling them, you can then decide if you want that price or not. I don't recommend listing them every week, hoping for more money, but, at least it gives you that option without having to haul them. And the other one is, direct, there's certainly feedlots out there that do will bid. You can work through brokers. I've got these calves and they can go around looking for feedlot bids for your calves as well. We see cattle moving across Canada. They go to Ontario to southern Alberta through different, just private sealed bids basically for your cattle.
That's some information, you bet. Thank you.
Yeah, no problem. Yeah, I think the other thing too with that, again, you can sell sort of like if the market looks really strong in June and July or today, or you can sell calves today for November delivery if you so wish. Those kinds of things are available. Again, the market spikes in the summer and the dollar crashes and prices could jump 20, 30, 40 cents. You can sell or market your calves long before you sell them. So these are just some ways we look at that, and that those opportunities exist through those electronic sales or private treaty sales. So it's a good question though, for sure. Any other questions? That's kind of what I wanted to cover, at least hopefully give a little bit introductory. Hopefully it wasn't too much, but as I said, it's not going to all come together in one quick hour, but certainly an opportunity to discuss more after.
Actually, I'm going to do the same thing what I did last time. So first of all, Christine, do you have any question? I'm going to allow you to talk.
Hi, thanks, Brian. I think I'm pretty good on that, but I really enjoyed your talk. I appreciate it.
Thank you.
Elgar, please.
Yeah, I'll toss in one question. I noticed that the EU has been importing a lot of our beef. Quick question is, what kind of cuts are they taking and what kind of premium are they paying at that end?
Oh boy. Oh, good question. Well, it's going both ways. We've seen our imports from the EU grow quite a lot too. Elgar, to be honest, I don't have that kind of info for you. Yeah, I can't even answer either of those questions, to be honest. How much of a premium it is, that's a lot of the information we don't really have unless you're directly involved, or the packers may, or the packer that's doing it may have that. But I guess the one way I could say it though, the EU certification, you need to do it before you sell your calves, long before you sell your calves. You need to be EU certified and such till your calf crop comes along to market your calves. So if you're looking at that, you need to be proactive. You can't just bring your calves to town and say, well, they're not implanted and they're EU eligible. They're not. It's not a lot of work, but you do need a vet to come in or the proper vet to come certify you. Some of these non-implanted calves, sometimes if you're just selling calves, we've seen, depends on quality and all sorts of things, but 5 to 10 cents sometimes on those kinds of calves that are non-implanted. You've done the paperwork on EU certified, but once you get down the line on the meat and the cuts, I don't know, Helger, sorry. I could maybe try and look into that. I'm not even sure where I'd go, but we could discuss if you want more when I'm back in the office.
Oh, we will. It's just that it's an interesting option. I played the game. It's just that after the bottlenecks that they had last year during COVID, they really ran into troubles having their animals slaughtered. I'm surprised that they got that much out of the country.
So, yeah.
Interesting comment.
Yeah.
Another question I could ask is, with the auction market volumes going through the way they have all the grass cattle gone through, or is there still a group of producers that have a fair number of grass cattle waiting to go through the markets?
Yeah, we're still getting questions on guys that are holding on to some of these grass cattle, or they're getting itchy or antsy to get them gone. I know, with moisture conditions where they're at, some of these grass cattle have even pulled back a little bit in points. So, we're kind of saying, it might not be bad if you got some to get them probably going, but there's still some out there. I think the bulk of the cattle have gone, but there's still a few sets. There's still some out there, guys, as they're calving later and stuff like that, to still keep them around a little longer. But again, most of them have gone through, but there's still a few out there.
Thanks.
Yeah.
So next one is Glenn Smith.
Unless he's on mute or
Could be.
Yeah.
Graham Rice, next one, please. Also on mute. Jace Hudson.
Can you hear me now?
Yes, we do.
Yep.
Okay, my question would be, you did a very good job, but where you see us in the cattle cycle, you say our inventory is low. Are we now entering the building phase, and is a lot of people starting to hold back heifers? Are we going to see a building of the cattle herd, and how that affects our prices moving forward?
Yeah, no, good question. I touched a little bit on it. We've been sort of the issue or challenge, or actually maybe it's an opportunity, to be honest, is we're very different stages between the US and Canada. Canada did not grow. We haven't really seen a cattle cycle in Canada post BSE. We basically shrunk steadily for 15, 16 years now. And I think the opportunity lies in the cattle cycle point of view. You got to look at North America. And as I said, the US expanded over 2 million cows and are now starting to shrink. So we're not in a building phase at all. And I think we're more into I don't want to say liquidation, but we're contracting our herd. I'm going to guess, or I'm thinking, or I was going to say pretty sure 2022, we're going to have less cows around than we do today. So we're going to continue to shrink. There's weather issues in the United States. Cow slaughter's fairly strong down there. So the opportunity side of that is if Canada gets the weather and can keep a few more heifers around, I'm kind of bullish for cow-calf producers and hopefully some better price responses as the money flows our way. I kind of threw hog prices out there, as a leading indicator right now of what can happen as our numbers tighten with the strong demand we're seeing for red meat. Again, my cautionary note in Canada is this dollar in feed costs. When I show the example, 85-cent dollar doesn't look so exciting for calf prices, but hopefully these cattle futures will rally and corn corn, feed grain, whatever stabilizes. So I think overall the general market feeling is, we could be anticipating higher prices for the next 2 to 3 years, because basically as our North American cattle numbers started shrinking in 2019. As I said, we sit here today, we got pretty much record cattle on feed numbers 2 years later. So we continue to shrink for another year or two, we're going to have tighter cattle numbers for 3 or 4 more years. Just the way the cattle cycle and the slow reproductive system of a cow works. So that adds some optimism to me, to the marketplace and for cow-calf producers.
Thank you.
Yeah, no problem.
Excuse me, Brian. There's another question in your chat room, please.
Oh. Well, the question from Dale, or do I have another one? Sorry, I just see the question from Dale.
Another one.
What can you? Sorry, I only see one question here.
Okay. So are there many auction marts that market open palpated heifers?
So, sorry, can you repeat that?
Yeah, I'm going to send it to you right now. Are you
Yeah.
able to see it now?
Oh, okay, here's a chat. Oh, okay. Yeah, sorry, I missed the question. Well, I think, I don't know if you're looking for a specific sale. Like, I think if you bring heifers in, you often hear them, at the auction block, they'll announce they're open or palpated. I think there's always a market for everything, and certainly, yeah, open palpated heifers are, some peace of mind, or can bring a little bit more for those kinds of markets. But I think it's just, again, relaying that information along and make sure it's getting announced. Or again, you can look at direct sales on those, but not sure if that answers your question, or if you want, you clear or fire away more if you want. If you're selling open breeding heifers, we've seen really good demand. Well, I would say pretty strong demand on a lot of these open breeding heifers, 15 to, well, more through at bull sales, but up to $1,900 on open breeding type heifers. So unless you're talking about cull heifers that maybe aborted or are yearlings or something.
Hi, Brian. Can you hear me?
Yeah.
Oh, sorry. I had to figure out how to unmute here. I was in a different place. Yeah, I was more just wondering kind of on the numbers that are coming into your office. So when you guys go through and look at your pricing on that type of animal, if there's a lot that come through the auction mart that you're basing your numbers on, because, I know a lot of people also sell them privately.
Oh, okay. Are these open palpated? Like these would be year-old heifers for
Yeah,
breeding?
like yearling heifers. Because I know a lot of auction marts will have the bred 2-year-olds, but it's not quite as often that they're selling the yearling heifers. So I was just kind of curious how often, at least in my area, just kind of how much is going on out there, and so that you're kind of sourcing your numbers from on them, I guess, is sort of part of the question.
Yeah, I got you. Yeah, no, good question. Anything with breeding stock, I'll be honest, like our bred cow prices, I can't find, we track everything, from 300-pound steers to 1,000-pound steers and bred cows, bred heifers, cow-calf pairs. The breeding stock numbers, including palpated heifers, is a tough one. The data's pretty thin and it's hugely variable. You know, we saw bred cows last fall sell from $1,300 to $3,000. Palpated heifers, as I've said, the same. We've, you know, $1,100-1,500 to $2,000 almost this spring. We don't get a whole lot of that comes to us. And from the auction marts, we don't, unless we're literally, you know, there's times somebody's in the office is watching a sale or is at a sale. Do we kind of catch that stuff? And we try to watch a fair bit of the auction marts live sales and we can hear the announcements. But in terms of any hard documented data we don't get a lot, unfortunately. So, and we are cautious in terms of how much we publish around breeding stock, because somebody's always complaining it's either too high or too, you know, often it's too low because their cows are worth more, their heifers are worth more. But that's a bit of a touchy one. And yeah, so I think to answer your question, we don't get a whole lot of it, to be honest. So it's more what we're hearing, I guess you'd say. That makes sense. All right, yeah, no problem.
Any other question, please? So no question, Brian. So thanks a lot for joining us this evening and sharing your knowledge and experience with us. Thank you. Thanks a lot.
Yeah, no problem. If anybody has questions or follow up, you've got my contact there, you know, feel free to pass it along and they can, you know, email me or call our office and discuss more for sure.
Thanks, Brian. Have a good evening.
Yeah, thanks for having me. And everybody
Yeah.
else, good luck here tonight in this weather. Yeah, good night. See everybody.
Thank you.
You bet.